Okay. Hello. 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 Can you hear me? Hello. Can you hear me? Oh my goodness. Happened. One sec. I'm coming. To be gone. So you can see my screen, Abi? I cannot hear you. I don't know why I can't hear you. Wait, can you type in the chat? Can you type in the chat? Okay. I don't know why I cannot hear you. So annoying. Okay. I can see your mic moving, but I don't know. Probably it's the system that I'm using. I will check on it later. Okay. Oh man. But you can see my screen, right? Okay. Oh, okay, okay. Let me come. Okay. What do you have to say now? Hmm. So let's let me get back to what I was actually the first thing I said I was gonna teach. Okay. Let's assume this was my first time looking at the charts, and I don't really understand what's going on, and I'm looking at why why do you call this area here, you call it sell side liquidity, and why am I marking out all these places like this, why is this, and why is this here? So sorry, if you, let's say you have a, huh? Why can't I get this thing? Okay. Okay. Okay, just let me know though if you don't get anything. Just let me type it in the chat because I cannot hear. Okay, so now why am I marking all these areas? Why am I marking out all these areas like this? And why did I mark out this place too, like that? If let me okay, let me just put it here. So I'm marking out swings. What do I mean by swings? So this is what I mean by a swing. There's a high, there's this candle here, this is the high of this candle here, this is the high of this candle, and this is another high that is higher than this candle, and there's one that is lower than the middle one here. So in between this candle and this candle, the highest point here, that's is called a swing high. So this swing high right here, you can look at this one, this one is even a very perfect example. This is a high, then this is, the middle part is higher than this, the two on the side here, right here. Okay, a high, the middle one is higher than this one here, and the middle one is higher than this other one too, right here. so it's called a swing eye. So just the same example as I used for this is also what is happening here. This green candle here is a high, but this middle one here is higher than this one, and this one is lower than this middle one. So this point here is called a swing eye. If you look at this point too here too, there is this candle here. This one is higher than this one, and this one is also higher than this one. So this right at this point here is swing high. So this one now has not been traded to. This one here has not been traded to. So I can call this place. If you notice, this is a swing high. This is also another swing high, and they are very close to each other. What this is called an equal high. So they are equal like this. This one too. If you look at this, I'll come back to. Okay, let me just mark it out as equal highs first, so we don't forget equal highs. So now let me come back to this now. Let me first take this off. So if you are observing this middle candle here, don't worry, I have this thing recorded though. I'll record it, so I'll post it to the YouTube, so you'll be able to check it there on the later on. So you don't need to worry about it. You can go back and watch it later on when I finally post it. Okay. So this candle here, the wick of this candle here is higher than this one, and it's also higher than this one. So right here, this is a swing high. So in this area, when price was consolidating like this, then drops down, failed to take out this high. This was what happened here. So let me put my come on. Okay. So what happened. So it was consolidating. It was coming up, down, up, down, up, down, like that. Then it drops down, came back up, failed to take out this one. So he got very close to it, but he did not take it out. So right here, this is called, because of this one, is this swing high right here is close to this swing high, so it's called an equal high. So that's why I called also this one too. These two swing highs that were in close proximity with each other, equal highs right there. Give me a sec. So that's most of the time when you see me mark out something equal highs, that is what I'm referring to, because this point here and this point, they are equal, relatively equal to each other, because this one here failed to take out this one, so they are relatively equal. So most of the time I just tag it as equal highs. Some people will just put it as relative equal highs, but me, I just call it equal highs. I like that. Give me a second, I want to check something. Okay. So that is why I mark this as an equal high right here. Can you see hear me? Or what I've said so far, do you understand anyone? Just type in chat. Let me. Whoa, 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 whoa. What's going on? What's going on in my chat? I can't hear you though. I can't hear you. Okay. You said okay, you grab some of it. I think it's better to do revision of it for better comprehension. Okay. I can actually see your screen moving, like your the this is naturally moving, but I don't know why I can't hear you. Actually annoying. Ah, man. Okay, okay. Let me actually bring the mic very close to me. Okay. Can you hear me very clearly right now? Or it's still skipping? Whoa, whoa, whoa. Did I just okay. Step on my screen. Okay. So let me start again. Let me start all over. Okay, let me use this one as example because this one is very clear. This candle here, these three candles, one, two, three. This the highest point here, right here, of these three candles is called a swing high. And how do we identify a swing high? A swing high, you can identify it by you seeing this candle that is the two candles beside this highest point here, and both of them actually fail to be higher than the middle one. This one here is this candle here is lower than this one. This candle here too is also lower than this one. So this swing point here, this highest swing point here, is called a swing high. That's what it's called, a swing high. So if you look at this candle too, this candle also is also lower. This candle is lower than this one here. And why also this one too is also lower than this one in this highest point here. So what this explain is this candle here is also another swing high right here. So anytime you see a swing high that has not been traded to, a swing high that has not been traded to, we I tag it as one. This is where you know your hello, as buy side liquidity. You can tag it as that. Most of the time, let's this swing high right here now. This one that's moving right now. So you look at this candle here. This candle is lower than this one. This the next candle beside it also is also lower than this middle candle here, and this candle is the highest swing point here. So right here now, if I'm to look at this candle, I can tag this candle here as a buy side liquidity. So now this candle that hasn't been traded to, After this candle has traded up, came down, came here, it drops down. If this once this candle trades back up into it, then it has taken out this buy side liquidity here. But as of this moment, it has not done that yet. It hasn't done anything like that yet. So this right here is classified as a buy side liquidity, since this is a low, this is a high, then this is a low. So this um one and two candle, once you see this, the middle one is the high, has a high swing point like this, you classify it as a swing high. So those are the is those swing highs swing highs like that. Those are the things that we always classify as buy side liquidity, majority of the time. But when you now finally start to see a swing high, there is one here, there's also another swing high, because this is one too, this candle here, this candle here, and this candle here. The mid one here is the highest swing point in between these three candles. So this is also a swing high. So this swing high is in close proximity, with this one. This right here already shows you they are relatively equal, they are very equal to each other. Now if you look at this point now too, this candle here, this swing high here, and this swing high that has just been created, they are relatively equal also. They are equal to each other. This one and this one, relatively equal with each other. So now this is now one swing high, two swing high, three swing high. This place now has created three equal highs. So and price has failed to trade above it. It does not Price always come back to do what? Always come back for these things like this, equal highs. Once price sees an equal high, the price always like to do what? Come after trading down, it wants to come back for these equal highs right here. But as of this moment, it might not do it in this session. It might not do it probably in this session. It might not do it now. It might do it later on at a later time. But that's one thing about price. Equal highs is one of the things they love most of the time. So now I've talked about swing high. So I'm coming. One sec. Let me type swing highs. The highest swing point in between three candles. So a swing high this is three candles here now. One, two, three. The highest swing point in between those three candles is called a swing high. So that's what anything that classifies as a swing high is the highest swing point between one, two, three candles. So that's why it's classified as a swing high. So now let's go to a swing low. If you look at this right here, a swing low is forming right here. Let me remove this. Okay, let's remove that. Remove this lipstick on the chart. And also take this away. So if you look at these two now, one, I want to even use this one as example right now. This is one, two, three. Just like a swing high, that one a swing high is the highest swing point in three candles. One, two, three. The highest one is called a swing high. Now this one now, one, two, three. The lowest one here is called a swing low. So this right here, one, two, three. This one is the lowest one here in these three candles right here. So this is called a swing low. So swing lows are just the exact opposite of swing highs. Majority of the time, swing highs are formed when prices when prices what's going on with this mouse? When price is trading like this, price got towards this area and it started dropping down. But before it dropped down, it created one, two, and three. Those are three candles, and the highest swing point here, that is the swing high. So after creating the swing high, it drops down, then consolidates for a while, making it look as if it's not actually going anywhere. This is actually something I'll later talk about again later in the future, but not now. Not now. So if you notice, after price came down here, it went back to coming. Come on, why are you not marking? Mhm. So after this swing high was created, price drops down, then create another swing high. One, two, three. If you are observing it, one, two, three. The highest one here, another swing high. So this swing high and this swing high, they are very close to each other. So it become a relative equal high. Price moved around, drops down, then went to take them out at this moment here. Then kept on trading higher and higher. So for every as price is trading higher, it's creating a swing high. One, two, three. This one is the highest swing point there. After creating it, it drops down again to do what? Just to take it out again. So that's what people usually call is breaking structure. So it breaks structure, it drops down, come back to break the structure like that. Let me keep using a visual example. Comes down, it breaks the structure again. Then after breaking that structure, it does what? One, two, three. The highest swing point again. It created another swing high right there. Drops down, just to do what? To take it out again. To take out this swing point again. It took out the swing point, this swing point too, like that. If you observe it, you see it's like a trend for price to take out those swing high. So now that price has gotten to a place on the left side of our chart that it has finally said, you know what, I'm not going any higher again. So now price begins to drop, but before it drops, it's created what? One, two, three candles. So that's the swing high. It created another swing high. Sorry. So it created another swing high, and when price drops down, we notice that it created another swing high, but this swing high was not able to break this structure here. So now this is showing relatively equal highs, but at the same time, it's this place. Now you can classify this place, since when price was trading down like this, after coming back up here again, it should have broken this structure to the upside. It did not. Since it did not, we can mark this place as what? A buy side liquidity. So that's why I'm marking it out as a buy side liquidity. So a high that has a swing high that has not been taken out is called a buy side liquidity. If there are now multiple swing high in close proximity with each other, so this swing high, this swing high, this swing high, they are in close proximity with each other. All of them, they are in close proximity. This one, you see this one, you see this one, they are close, very close to each other. This one too, close to each other like this. So what this is called is, we call them relative equal highs, or just equal highs, like that. So those are the names we call them: relatively equal highs or equal highs. So the first one is a swing high that has not been traded to. Oh my goodness. Yeah, it's a normal thing for you to get dizzy, because these are technical stuff in the market. So all these things, you will need to understand them after studying and after looking back at your own charts. That is when you will actually be able to get them and identify them. you just only looking at my own chart, you will not really get the gist of the situation. So here I wrote swing highs are the highest swing points in between three candles. The same thing also goes for a swing low. Also, swing points are also what? The lowest swing point in between one, two, three candles. If you look at this place here now, this one, two, and three, this is the lowest swing point here, right here. So this is a swing low. So I'm coming. So a swing low is the lowest swing point in between three candles, right here. And let's look at this one I marked out here. One, two, and three. This is the lowest swing point in this one, two, three candles here. So that is why this swing point now that when it has not been traded to, I marked it out as what? Sell side liquidity. So that's why I can mark something out. A swing point that has not been traded to, a swing low that has not been traded to, you can tag that as sell side liquidity. A swing high that has not been traded to, you can tag that as a buy side liquidity. Swing highs that are in close proximity with each other, like this, they are called what? Equal highs or relatively equal highs. So those are the things. So I'm looking for, if I can find an example of an equal low. This is not really that obvious, but if you look at this one, two, three, this is a swing low. This one here, there's not really much of a wick, but you can still see the idea. One, two, and three. This is also a swing low. I can do this right here and see, because this one, they are actually a little bit close to each other right here, like this. So this is also, you can call this a relative equal low. Do I have that on my? I don't. I did not. But relative. Equal. So they are relatively equal. They are in close proximity with each other, and price has not traded. See, price has not dropped down towards this relatively equal lows right here. So it's called a relative equal lows. This swing point, let's imagine the let's imagine this one was not there, and we will just only have this like this. I can tag this and put my candle and my horizontal ray on this swing point and call it what? Sell side liquidity, right here. Sell side liquidity. So a swing point that has not been traded to is what? A sell side liquidity. This is a swing low. A swing low that has not been traded to is classified as a sell side liquidity, and a swing high that has not been traded to is called what? A buy side liquidity. So for now, let's just keep it at that, because this will be like, this is already too much information for a beginner phase lecture. So until we talk next time, be safe.